Hey, welcome to Echoes of Impact with Noura. This is your host, Noura Almasri. Welcome to the show. I am excited today because I want to talk to you about compliance, about being in compliance with taxes, with the tax law and everything with IRS and actually the state, but we're going to focus more about the IRS. This is very important for you as business owner and actually as a taxpayer also. So even if you don't have your own business, I want you to stay with me because we're going to talk about you as an individual, about your taxes. Yeah, maybe you're not worrying about tax season anymore, but guess what? A lot of people have been receiving tax letters from the IRS. And a lot of you guys, I know you ignore it, you don't open it. And then when you open it, it's too late. So I don't want you to ignore it. I want you to actually open any letter you receive from the IRS, because this is the first step you want to do. And then you want to read it. I want you to actually seek a consultation with a tax professional. You can definitely come to me because I'm an enrolled agent. I'm a tax professional. This is what I do. And you can connect with me at nourasbooks.com/contact. You can book a call with me and I can help you right there. Or you can talk to my guests or any tax professional you actually want to work with, whoever you feel comfortable to work with. The main thing is you really want to seek a professional consultation before you do anything, because a lot of people try to solve the problem themselves and they get into more trouble. And now I'm not going to say it's not going to be able to be resolved, but you might get the things more complicated and it might cost you much more money. You could have saved if you started with connecting with professional first. So I want you to stay with me. Even you guys, if you are a tax professional, I want you to stay with me because I am talking to a tax lawyer, a tax attorney. She's an amazing lawyer. She talks about the due diligence for you as a tax professional. I know a lot of people who do taxes, they do not have the education they need to do taxes. So you guys, if you fall into this category, please stay with me because Josie, my guest, is going to actually share a great information for you. And I have my other guest, Timalyn. She is the America Favorite Enrolled Agent, or EA. She's amazing. She has a lot of great stuff to share with you. So I want you to stay here with me, listen up, watch the show, watch it more than once, because we're going to share a lot of information for you as a business owner, for you as a taxpayer, regardless of you're an entity or individual or tax professionals as well. Again, this show meant to actually give you the education you need to run your business correctly, to have important thing that you need to know, so you do not have to be actually out of business just because of compliance, just because now you owe so much money and you cannot handle it anymore and cash flow is gone and flew away. We don't want you to reach that point. This is why I want you to stay with me. I want you to educate yourself. Watch this episode as many times as you want. It's gonna stay here on the internet world, regardless of where you are watching, YouTube, or watching on the landing page for the show. If you're watching on TV or if you're listening to the radio, go find the show on the internet to re-watch or listen. So make sure you actually got the information you need. And you always can connect with me at hello@echoesofimpact.net to make sure you get me your voice and I listen to you. I want to make sure to provide you the information you need. I don't want to stay here forever. I can't wait for you to see and hear my guest. So this is Noura Almasri at Echoes of Impact. We will be right back. Welcome back. This is your host, Noura Almasri, and this is Echoes of Impact with Noura. I'm really excited to introduce my next guest, Because now I know like tax season is over and a lot of you guys started to receive those letters from the IRS. And I know you get nervous, but if you get the knowledge, you will be more relaxed. I know you're still going to be worried, but when you get informed, you will know what to do. And this is why I brought my friend, Timalyn Bowens. She is the America's favorite EA. She is amazing. She has been working with this for a long, long time. Welcome to the show, Timalyn. How are you?
Thank you so much, Nora, for having me. I am doing well today, and I'm excited to be here with you to talk about taxes.
Same here. I'm really excited for you to share like all the information, all the knowledge that you know, like, and you experienced with your clients along the journey that you have. So, can you a little bit introduce to the audience? Who are you? Like, what's your background?
Absolutely. So you've already said my name is Timalyn Bowens. I am known as America's favorite EA. So as an enrolled agent, just like you, I am licensed through the Internal Revenue Service to represent taxpayers in all 50 states. As a matter of fact, I tell people any U.S. taxpayer in the world. So with that EA designation, it gives me the privilege to represent taxpayers before the IRS, which means essentially, I'm standing in the gap for them. I'm their advocate to tell their financial story to the IRS, whether that is in tax debt negotiation, if that is getting a lien removed, getting a levy, which means the IRS is cleaning out their bank account or they are taking part of their paycheck. I'm that person that says, hey, this is the situation, what's actually going on, and this is what the client can actually afford to pay, or in some instances, why they shouldn't be paying that amount at all. Um,
Go ahead.
I've been in the industry since 2011. So I had big CPA firm experience, but I was really drawn to being able to help people who didn't know how to fight the IRS. And that's why I chose to be an EA. And that's what I focus on is tax representation.
This is amazing. And actually, I know, like, I get this question all the time when I say enrolled agent with the IRS. People think I work with the IRS, and I try to explain to them, no, I represent you. I don't work with the IRS. But since you are the expert and you have been there like way longer than I have been in the as an EA, so can you explain a little bit? I know you already covered a lot of it, but can you explain to the people a little bit more, like, why they shouldn't be afraid? You said you represent them, not the IRS. What is an EA? How do we get to be an EA? And why they should come to us as EA versus than CPAs?
Okay. Let me make sure I don't miss anything here.
Yeah, no worries.
So the enroll designation has actually been around since 1884, around the time of the Civil War. And Congress gave us the ability as enrolled agents to advocate for taxpayers. Now, in order to become an enrolled agent, you have to pass a three-part comprehensive test. And this test focuses only on taxation, right? So we have part one, which is individuals, part two, which is business, and then part three, which is a mix of ethics, tax law, those types of things that are really important, right? But in addition to that, an enrolled agent, they've taken it a little bit more seriously than your non-credential preparers because there is a background check that we do have to pass. We have to be in tax compliance ourselves, right? So we have to make sure that all of our tax returns are prepared. And if we have any tax debt ourselves, that some arrangement has been made. But when somebody is looking at what type of tax professional they need, I always say you need to look at if you have a specialized situation. For example, if we have somebody who's a business owner, they're not going to want to go to a tax professional that doesn't work with businesses, right? Because each area of tax law is specialized. So when you are looking at having an issue with an IRS beyond tax preparation, it's really important that you take into consideration who's going to be able to step in that gap and represent you. And only 3 licensed professionals can do that. The enrolled agent, of course. Then we do have certified public accountants and tax attorneys. The main difference within EA is that, again, our license is directly through the Internal Revenue Service and it's focused in taxation. So while the other professionals can represent you before the IRS, when we're looking at the CPA license or a tax attorney, those are going to be state licenses and designations. So it is a little bit different, but of course, people want to do their due diligence to see what that credential means and what that professional specializes in.
Thank you so much. Thank you
You're
for this
welcome.
explanation. This is very important for people to know. Now I want to touch base on like the letters people are receiving now from the IRS. A lot of people like connecting, like they're afraid, like because they're receiving this letter, they might ignore the letter and find it later, and then they run to you. I'm sure you've seen it all. So can you like touch base on this? Like, what's the most common letter right now? Like, what have you seen? What should people do?
Absolutely. So they're kind of coming in phases right now, right? Because when COVID came, the IRS stopped enforcement to a certain extent. So I always like to remind people what one of my good tax sisters says, the IRS is slow, but not stupid. So for those people that owed prior to the pandemic, the IRS let up a little bit and they got kind of comfortable. So then in November, we saw millions of CP 504s come out. And a CP 504 is going to be the intent to levy. Now that's the notice where you want to start sweating at that point, because the intent to levy means that you could potentially wake up to a cleaned out bank account if you haven't made an arrangement with the IRS. They could reach out to your employer as well and start garnishing your wages. But prior to getting there, like I said, these are people that owed before the pandemic. We have people now that owe for 2022, 2023 even, and they are receiving a CP14. Now, a CP14 is going to be a demand for payment. And when you receive that, the IRS is going to give a deadline for you to make that payment in full. Now, for your typical taxpayer, you may not be able to pay that bill in full. What I encourage people to do is breathe. I know that's the opposite of what our automatic response is when dealing with the IRS, but you want to make sure that you take a deep breath and you actually read the notice to see what the IRS is asking of you. So with the example of a CP14 demand for payment, if you know that you can't pay that by the due date, you do have options, right? If you've been a compliant taxpayer, so you have your last 6 tax years filed, you don't think you're going to owe in the future because you do have withholding from your paycheck, you're not going exempt, or if you're a business owner, you're making those estimated tax payments, you may qualify for what's called a guaranteed payment plan. With this plan, you have 36 months to pay that debt in full. Now, mind you, there will be interest that still accrues, but you have something worked out with them to avoid the levy. Now, if you avoid that CP14, you're going to get a reminder, then you will receive that intent to levy. And that's when you need to make sure that you take action fast.
Yeah, so I know like some states, they do send letters for, even if you are a tax, you're a business owner and you have client, they know like that client issue maybe a 1099 for you as a business owner. Some of them, like Illinois, because I live in Illinois, they would send actually a letter for your employee, for not employee, that for your clients, tell them that you owe them this money and trying to get payment sent to them from your clients directly. This is on the state level. Have you seen anything like that on a federal level?
Absolutely. So the same way that they will send a letter to your employer and say, hey, you need to withhold this amount from their wages, The IRS can do the exact same thing if you're a business owner doing contract work. So let's say, for example, we have a lot of people working in the gig economy right now.
Mm-hmm.
If the IRS is looking at your data and they know that you were getting a 1099 each year from DoorDash, they know that's your source of income. Guess who they're going to reach out to withhold part of the money that you've earned? You never want to have your situation where the IRS is controlling your cash flow. You always want to make the arrangement so you are still in control. That's why, again, number one, you want to breathe. Make sure that you are actually reading over the letter. I call them the IRS love letters. And then you are responding. So if you can't pay it off within 36 months, don't flip out. There is another option where you can do 72 months. And then even beyond that, there are options where I don't want to judge anyone's tax competency, but you may need to pull in a professional if you have to turn in financials to do what we call a tiered payment arrangement or a partial pay installment agreement.
Mm-hmm. Yeah, so I've seen some people actually really getting this thing worse when they try to solve the problem on their own, and then they come to the tax professional trying to ask for help when they already did the first step. Like, would you say you would still be able to help them if they did that first step and then they got things more complicated?
Absolutely. Um, Everybody's first step is going to be different. So I like to say to people, when you're cooking a recipe, we may get the same end result, but you may not start the same way that I start. I have a proven process that I take clients through, so it doesn't really matter where they've started. I'm still going to start in the same place to make sure that I have all of the information. And I talk about this too, because I do have free resources for people. There are three phases that you should go through when you're negotiating with the IRS. You want to make sure that you actually understand what's going on. Check out your tax transcripts to make sure that the amount that the IRS says that you actually owe. Then you also want to see if any additional penalties have been applied. You find that out by taking a look at your transcript. And no, that doesn't mean logging onto your IRS account. You have to actually log in and then click on the transcript because the overview on the account is not giving you the breakdown of all the penalties. Once you see that, you can see what happened. You can see what's eligible to be removed or forgiven. And then you fix any compliance issues you have. If you don't have a certain amount of returns filed, you're not going to have a properly set up installment agreement, which means you're paying more interest than you have to. Then from that point, you see what you can afford to pay based on the IRS standards. And now the ball's in your park and you can actually negotiate.
Awesome. And you can negotiate on their behalf since you're an enrolled agent, so they don't have to worry about that. Awesome. Thank you so much for all these great
Excuse
information,
me.
Timalyn. Like, this is very helpful for everyone, I'm sure. And we need to bring you back on the show. Like, I know the time we have is not enough for talk about all your knowledge and things that like to get people actually the knowledge that you have. But for now, like, I want to ask you, how can people reach out to you if they decided to they want to work with you, get more information about what should they do and everything?
Yeah, so you can check out my website, which I believe is scrolling somewhere here, at www.bowenstaxsolutions.com. And in the top right corner, there is a book now button, and there you can find which consultation is a good fit for you. Because some people have started the process and maybe they just need a consultation for guidance, which I will give this disclaimer. It is a paid consultation because I'm not gatekeeping anything. I want you to win. I'm on a personal mission to fill the tax literacy gap one taxpayer at a time. So if we're seeing if you're a good fit for me to take the case or to work with me in my firm, there's a call for that. If you just need some guidance because you want to DIY, there's also a call for that. But also let people know, because my book does stay pretty full, I do have a resource. I have a podcast, Tax Relief with Timalyn Bowens. And on that podcast, I talk about the same things you've heard me talk about here, but in more detail. So the process you should be going through before you negotiate with the IRS, understanding different tax notices, just so you're informed before you make that decision.
Awesome. Thank you so much, Timalyn, for all this information. Guys, go ahead and actually subscribe to Timalyn podcast. And if you need further help, like book a call with her. You cannot get anyone to help you with any tax issue better than Timalyn. She's amazing, and she is America's favorite EA. Thank you so much, Timalyn, for being here with us. It's really our pleasure to have you on the show. This is Echoes of Impact with Noura. We'll be right back. Welcome back. This is your host, Noura Almasri, and this is Echoes of Impact with Noura. I'm really excited to talk to my friend. She is the attorney, Josie. She's going to talk to you about what to do if you have to eventually go to court because of the IRS problem. Because, like I said before, sometimes you can just work with a tax professional. Sometimes you will need an EA, enrolled agent. Sometimes you have to go to court. And the only person who can go with you to the court is actually a tax attorney. And this is why we have today my friend, Josie Walton, and she's going to actually talk to you about that. Welcome to the show, Josie. How are you doing today?
Good, Nora. How you doing? Thank you so much for having me today. I appreciate it.
Of course, it's my pleasure. And actually, people need to hear from you, especially now a lot of people are getting those tax notices. And I've actually had like few people connecting with me that they said they reached the tax court. And like when I get someone like that, I give them your number because out of our hands now, it's in your it's with you. So tell them a little bit about you, your business, before we get into the details.
Okay, sure. Like she said, I'm Josie Harris Walton. I'm a tax attorney with QPWB. We are a mostly insurance defense, but I also ran a tax division here at QPWB. We represent taxpayers, individuals, high net worth individuals, corporations who have either they have a notice of deficiency, which we'll talk about in a minute, where they have to petition the tax court within 90 days, or they actually have paid their tax liability and they want to get reimbursed for that, get a refund for those taxes, and the IRS has denied their refund, or they file a return, the IRS has denied their return, and now we have to go to court to either receive the refund back or we have to dispute the tax liability. So that's pretty much what I do in a nutshell. All things tax litigation.
Awesome. So people often are afraid when they hear IRS, and they think always IRS will be right. So if something they say, okay, so I'll just pay, I'll just do this, I'll just forget about this money. And now I hear you saying that sometimes IRS has to return your money and they haven't yet returned it. So you help people go to court to get this money.
Yes, that's correct. Yes, that's right. So people, if you have a tax refund and you request that tax refund within the reasonable statute of limitations, which is 2 years from the date you paid the money or 3 years from the time you filed the refund, then at that point you can actually request a refund. It's a form 843. You request the refund from the IRS, or you can also do a amended tax return. If the IRS denies it, or within 6 months they do not respond, you can actually go through and you can request that money back from the IRS in district court. In a district court, wherever you're located, if it's Florida, if it's Georgia, if it's Alabama, whatever district court you're located, you can request those refunds back and you can sue the IRS for your money back. And that's what we do.
Wow. And how often people get their money back when you do this?
Very often, I normally have a really good process of doing a discovery to see if they actually qualify for their money back before I would take it to court, because district court is very expensive. It is, and it's a lot of work to district court. So before I actually file the complaint in district court against the IRS, I verify that you're going to get some funds back. Or like even if you're just suing them for some reason. I had one corporation come to me about suing the IRS because IRS allowed one of their agents had the news look at their returns, and they're not allowed to do that. So it's like $1,000 per return or per when they look at it, and they wanted to sue the IRS in district court. So they could have done that, but most of the time we see it was a refund, and it's very often when we go to court we get the refund back.
Okay, awesome. So when someone actually when they get into the courts, like the other way around. So when IRS wants money from the person or the corporation, and how long does it take for them to finally, like now they have to go to court and the IRS actually take them to court? How long usually that takes?
So normally, of course, most of the time I see it when there's an audit. When there's an audit where the IRS is examining your tax returns and say, hey, you owe money, you didn't win the audit, so you owe, let's say $10,000. You owe $10,000 to the IRS. And the IRS, what they do is they normally do a notice of deficiency. So you have 90 days to petition the tax court, or if you're out of the country, it's 150 days to petition the tax court. If you don't petition them, you lose your option to go to court. But if you do petition in time, you're talking about from that point, once you file the petition, it takes about 3 months for the IRS to come back and say, hey, let's see if we need to do a mediation, which that's an appeal, where they have an appeal officer will look at it with your tax attorney and say, hey, we can do this for your client. We looked at it. They do, they don't owe as much money, or they don't owe any money. If you don't get it resolved in the appeal process of the tax court, at that point, you get to the point of going to tax court where you actually got to defend yourself and go. I just went yesterday to tax court with the client that had a tax liability. So you get to actually, you have your time in court. So from in that time, it's probably about a year, because of course the IRS, the U.S. tax court judges do not come to all the states every month. They're not just there because they're in D.C. So they come to Georgia about 4 times a year. And so during that time, that's when we have a court. So right now we had court in May. We don't have court again until September. So anyone who did not get in May will have to go in September. So this could be a year process. And it normally takes about a year for you to go from notice of deficiency to the actually going to the tax court, because there's so many different levels. And most of the time we try to settle, which is like 90% of the time you can settle it with the IRS appeals or the IRS attorneys, and you don't actually have to go to court. But some cases you do have to go to court, like yesterday I had to go to court.
Okay. So you saying the courts is not all year round, like, so it's not like personal things. It's just like, okay.
Yeah.
And
so it's like the summer, they do the summer, fall, spring, and I think a winter, like right before Christmas. And then, so it's only like 4 times. They only come 4 times. Yeah.
Oh, okay. So is it in every state like this?
Yes.
Okay.
Yes. So all of the tax court judges, they travel. They travel from DC, so they have certain areas that they travel to, and they travel doing that. Now they travel all the time, but we only see them in Georgia 4 times. Alabama may see them 4 times, something like that per year.
Oh.
That's why it takes so long for a U.S. tax court case.
Okay. So where can you represent people yourself and your office?
So I can represent people anywhere in federal. As long as it's federal, we can go anywhere in the United States. So I can represent in Alabama, because it's the same tax court judges, and it's the same tax court. Most of the tax courts are held at the federal buildings, right? Where the district court is, they have the federal building. So I can go anywhere and represent a client. Doesn't really matter.
Okay, that's interesting. So
except district court, except district court, when district court you have with a refund, it's different. You have to actually be, for district court, I have to be in that particular court. Like I'm a member of Georgia, Northern, Southern, Middle, and I think it's lower. Yeah, no, Georgia, Northern, Middle, and Southern court. And then Alabama, because I'm actually barred there as well, I can represent clients there. And then, but if you have like another case where it's district court, we have so many attorneys in our office that can actually sit I can do pro hoc vice, which means I can go in, they'll allow me to go into their state and represent you and then leave their state after I'm done representing you. So yeah. So pretty much kind of everywhere, but still district is a little bit different than, I don't need anybody for tax court, but district court, I will need someone who is actually barred as an attorney in that particular state.
Okay. Okay, sounds good. So, do you recall like any interesting case, like can give people like an understanding of what worst case scenario could happen in a court?
Case scenario in court. I think, I'm most of the time I only go to court off of not documentation. I go to court off of law. It's better to do that because with documentation you can work with the IRS attorneys and everybody can come up to a happy medium. But when it comes down to law and how you're interpreting the law, that's the cases that really are a big situation. Let me tell you this case yesterday. So we have husband and wife who are they rent out properties they rent out properties. They are both have full-time jobs. They both work full-time jobs. So there's an issue where if you are you rent out properties, you have what they call passive income, which income where you don't actually truly work actively in that business. It's not material, truly working in that business. So if you don't work truly in that business, you only can take that income, that loss from other passive losses, which means you don't actually work in the business, right? Full time. So if you have a full-time job, both have full-time job, it's hard to get all those losses. You got to carry them over to the next year. So it's hard getting all the losses. That was the issue I had yesterday with my client, is that they both were full-time employees. They rented out a property, but they also they was not considered real estate professionals. So they couldn't take all of the income. They only could take up to a certain amount, and then they still have to be over $100,000. Over $100,000, they can't take all of it. It has to be reduced down. So it's a lot. That is a huge case to win. That's one of the most serious cases to win in tax court. So I'm not going to go unless I truly know I can win that case. And the issue that I have is that the reason why I went to court, one of the husband has a license. He's a real estate agent. That's how I'm in a win the case because of that.
That's awesome. Good luck with that.
Thank you. I'm waiting for the judge's decision. So thank you very much.
Yeah. Awesome. So I know we can talk about this forever. And I know people don't have the knowledge they need in order to actually be prepared for any tax situation. And that's what we're trying to do here. And we're going to be right back with Josie, but now we're going to be talking about tax professionals. I know we have a lot to cover. So this is Echoes of Impact with Noura. We'll be right back. Welcome back. This is Echoes of Impact with Noura, and this is your host, Noura Almasri. We're back with my friend Josie, and we're going to be talking about tax professionals. So usually, guys, you think IRS and the tax law just behind the taxpayer. And I know you guys give us a lot of hard time actually requesting documents. No one had never asked me about this document. Why do you need this? I don't feel comfortable sharing this. Guys, we need to do your taxes and we need to protect yourself. And Josie is here today to actually talk about this and tell you exactly why are we requesting this information. So Josie, can you help us with this?
Yes, I can. Definitely. Tax professionals are my niche. So I represent a lot of tax professionals and in due diligence audits and criminal investigations. If they don't prepare your returns correctly, they can actually go to jail. They can go to jail. So that's why when they're on you about your documents, it's because they can get in trouble with the IRS and with the state if they don't prepare your documents properly. So that is one of the things that I do. I actually represent, that is my niche, is tax professionals who are in a criminal investigation. They may have a issue with the IRS. There are things like that. They can't prepare returns anymore. Those are the people that I represent. And most of the times because they end up letting you guys slide. So don't let your tax professional go to jail because you want to slide.
Yes. See? No, we didn't bring anything from our Here's the tax lawyer, and she's telling you that. So technically, if we are, let's talk about personal first, and then we can move to a business.
Okay.
So in a personal tax return, what do we require as tax professionals to have in place in order to protect ourselves?
So for a personal tax return, when you're preparing a return, you need to, that's what we call it's called the due diligence. It's due diligence. And as a professional, you have to make sure that if someone's qualifying for certain credits, earned income tax credit, child tax credit, American Opportunity Tax Credit, and head of household, that you have did an interview with them, properly understand that they can take those particular credits and that they qualify for those credits. If they don't, you're supposed to say, well, unfortunately, you can't take those credits. So with a personal return, that is the main thing I see mostly with personal returns is they need your driver license. They need that information regarding your leasing. They need the information regarding if you head of household or if you have your children. They need that Social Security card because they can be there can be what they call a due diligence audit. A due diligence audit is where the IRS comes in and they want to look at their returns that they prepared. And they're your returns, and they have to have certain documents. They have to ask certain questions. So when they're asking you questions about everything, that they can ask you like, oh, why are you all in my business? Because I have to ask these questions. If they don't, they can get a penalty all the way up to having a criminal investigation, which also jail time. So that's why they ask all those questions when on a personal return.
So we do need to have a copy of children, Social Security, people's Social Security.
Yes.
Right? We do have to have that. And what about actually some people, they resist to have that. They will actually say, okay, we can give you a prior year tax return, and that has the Social Security number for the kids and for everyone. Would that be considered yes?
No, that is not. No, you have to go. They have to get all your information just as if they were preparing your returns for the first time. Now, this is what they could do. If let's say it's a prior client, they can, if they have the information with them already, they can get it, but they have to verify. You have to verify, is this you correctly? Is this Social Security information correct? Or you change your address with driver's license. They want to get all the information. They have to get all the information. If they don't, like I said, they will get a penalty. And that's the issue that we have a lot of, because people are like, oh, well, you prepared my tax return for 20 years. Okay, well, I still got to verify all this information over again because things change. And the IRS will ask them, did you verify this information? And they have to say yes, and they have to have it documented that they verified it.
Yep. Yeah, so actually, I always get a resistance from a lot of clients. No, I'm not comfortable to do. I actually reject service when they don't want to provide this information. So what would you say to that? Like,
that's exactly what you're supposed to do. Per the IRS code, if the client will not give you the information or if they don't qualify, you can reject their service. And you're required to do that. So it's not like you're even though you're doing what you're supposed to do, you're required to reject their services. They don't give you the proper information to prepare their returns. And if you don't reject their service, then you could end up losing your business because you did not, retain the information properly and have that information on you. So it's a lot. So when you're prepared, it's telling you this. They're not saying it just to be in your business. They're saying it because they can lose their business and you won't have to prepare next year because they'll be in jail or whatever. They can't prepare returns anymore. And you don't have anybody do that because you have people who they don't care. They don't play like you. If you don't get your information to them, they will not take you as a client. Simple as that.
Awesome. Thank you so much for sharing that. Now let's move to the business client. So when someone wants to come as a business, actually, I know I've seen a lot of people going to tax professionals who do not know how to prepare business tax returns because I've seen it a lot. And I know like a lot of other tax professionals seen it a lot. Like when someone comes and they got advice, you don't have to prepare taxes because you didn't get any income. And this is a partnership actually. And sometimes they put it in the Schedule C when it has to be on other forms.
Yeah.
And they actually resist also providing information. So what do we have to have as tax professional for a business return?
Well, you're supposed to have all the documents for that because you want to verify that if they are audited, that if you're audited, a tax professional is audited, or even if a taxpayer is audited, you have the proper documentation for 1120 S, 1065, which is a partnership return, 1041, which is a state return. You have to have all that information. And let me tell you what I always hear from taxpayers. well, I gave it to my preparer, or preparer didn't tell me I needed that. And they could be in trouble. It's the same thing. They could be in trouble for fraudulent returns, because that's considered fraud. If you don't have documentation that you can show me that you did all this, you had these expenses, auto and truck expenses, you had legal expenses, you had contractors, 1099s, you have income. If you can't show the information, they can't prepare your returns properly, and then they will get in trouble for that. And then also, if you don't have the proper tax return done, let's say a 1065, which is a partnership return, or 1120S, you can get a penalty. And then the first person you're gonna blame is your tax professional, who did not know you were supposed to file an 1120S, because they didn't ask for that document saying you are now approved to be 1120S. Or if you have multiple people who are not husband and wife, and they know they're supposed to file a 1065 and give a schedule K1, they will mess you up, and you'll file your returns without that, and the IRS comes back and audit you. And now they can audit the whole return, not just a portion of the return.
Mm-hmm. Yeah. So would you say, like, I always have it in my questionnaire, actually, to ask people for the article of incorporation of the business, just to, and the EIN, a copy of the EIN, to know what type of business they have. But what should we do as tax professional if someone actually, they registered at whatever, like, form, like LLC, C Corp, and then later on they elected to be an S Corp. So what are we supposed to do if they did not provide this information? So we had no idea, because a lot of clients don't even know what type of business they are. So what should we do as tax professional when this happens?
Well, to protect yourself, you need to, that's the reason why people always do questionnaires, or they always, ask for information from their tax professional, preparers. Because if I'm representing you and they're saying, okay, you didn't do this properly for a taxpayer, why? If I can show that you actually sent them the information saying, hey, are you an S corporation? Are you 1120S? Or asking probing questions about, do you have other partners in your business? Things like that. I can help you resolve the issue. But if you don't ask those questions, which a lot of people don't know to ask those questions, but they don't understand the 1120S's, or if you see something that's different, for instance, if you see that person is filing a W-2 for themselves, they can't file on a Schedule C. So you should say, are you sure you're not an S Corp? So questions like that should be asked, but you have to know the law and know how to prepare a return for that in order to be able to do that. So those are the things that I think the best thing to do is an intake form. An intake form is the best thing a tax professional can ever have in their business, because that will help them out so much when it comes down to the IRS is, coming after you because they're saying you didn't prepare a return properly. Or even a client can come after you if you're not preparing a return properly and you gave them a penalty, but they didn't tell you that they were an S Corp or they were a partnership return.
Mm-hmm. So let me ask you this. So people often, like, they don't want to complete this organizer every year. They might complain. They might be okay first year because they think, okay, you're new, but then second year they start complaining. Do I have to fill in this every year? Sometimes I seen some tax professional offer, okay, someone would call the client and fill in the organizer for them while they're on the phone. Would that be okay?
It's okay, but I don't think you should do that. I feel like if you're preparing returns such as, business returns, you need to have that person there, like even on the Zoom or something, but you need to have documents. You need to, and they have to do a new organizer every year. Everything changes. Because what you don't want to do is you don't want me to put that you had $500 in 2020 for advertising. You have $500 again for 2021, 2022. The IRS is going to look at that and say, wait a minute, this could be a fraudulent return. They're going to audit you. So I think that, don't be mad with your profession when they're doing their job. They're doing their job because honestly, with business owners, you should have a bookkeeper or someone who actually does it every month. And then what you're doing is you're providing the information to the tax professional to use it, your profit and loss statement. So that's the issue that I feel like a lot of people that I see, small businesses have, is that they don't have a bookkeeper every month to reconcile those books. And so they come with their professional, they give them, okay, well, I'm gonna give you this, but I don't know what you're gonna do with it. I don't really care. All those things. You cannot do that, because actually when you sign your return saying it's proper and it's correct, it's supposed to be proper and correct. That means you reviewed it, and you could be in trouble as well, and you can get a penalty as well. That's what happened with my client yesterday. Is she said she just gave it to her preparer, and he prepared it. He prepared it incorrectly, and she could get a penalty because of that.
Wow. So I know, you know what I think is the problem? Like I started explaining this to people, and you tell me actually if I'm correct or not. Like tax industry is not regulated. So anyone can come and prepare taxes on behalf of the client. And because they have no knowledge, people get trained that, okay, why this person is doing it for me and you're not doing it for me.
Yeah, exactly. That's exactly, and that's the reason why it is. You can pretty much open up shop, get a P10 number, which is prepares tax identification number. You can get what they call electronic filing identification number. You can go to like TaxLayer, one of the service softwares, and get a software, and you can open up shop right then and there. Boom, you are now a tax professional. And because you don't have to, you're not regulated, you're not required to serve. Even Circular 230, you are, but it's not like when it comes down to clients in a situation with preparing returns, you can pretty much open up shop and they can prepare your returns, don't know what they're doing, and then leave you in a bad situation. And that's the reason why when you have a good preparer when they asking questions, because they really want to know, because honestly, you may forget a particular credit you can take or a deduction you could take, and because they're looking at your information, they can give you additional deductions, which means you don't have to pay as much, or you have a refund or whatever. So be kind to your tax professionals, because they take a lot of heat, and they really, really are trying to do, a lot of them are really trying to do very well in this industry. And you have so much fraud. That's another thing. You have so much fraud in this industry. I see it so much with people doing fraudulent things, people putting fraudulent information on someone's tax return, and just to get additional money back, and you have a bigger issue. And you actually, to be honest, taxpayers, you can go to jail too for a criminal investigation. You can go to jail for a criminal issue as well, because if you knew that was fraud and you let them put it on there, then you could go to jail too. So what we're trying to do is keep everybody in compliance with the IRS and keep everyone out of jail.
Awesome. Thank you so much, Josie. This was like tons of knowledge, and I'm really happy to hear this from you, to make people actually hear it from a lawyer, the professional itself. So like this is gonna make our job much easier when people listen to you. Listen to what Josie had to say. Listen over and over, because a lot of gems over there. So how can people get in touch with you?
You can reach me at my law firm. My number is 770-650-8737. Also, it's qpwblaw.com. That's where you can reach me. You can look at our website, see exactly what I talk about all the time on there. They have a couple of things on me about it, as well as Facebook. I'm Josie Harris Walton, or either Instagram, Josie Esquire. I also have a YouTube page, which is Tax Pros Concierge. Most of it is about tax professionals and things that they get into, but I think it's interesting for our taxpayers to hear it. So that's how I can be reached.
Thank you so much, Josie. It was
You're welcome.
a pleasure having you here today.
It was great being here.
Thank you. Guys, make sure you do what you have to do, whether if you are a tax professional or you are a taxpayer. Whatever can happen to all of us. So make sure you be careful, and you be careful who you hire, so you don't need to go to court. If you have any question, if you need to connect with the show, Echoes of Impact, make sure you email me at hello@echoesofImpact.net. That was Noura Almasri, and this is Echoes of Impact. Until next time, keep making an impact.
This has been a Now Media Networks feature presentation. All rights reserved.